Hello guys. um, as I told you in another video, the whole market has reversed. It was going down from the support line, from the resistance line for 1 week or two, and then last week, which is the week of elections, the stock has reversed and goes so wide for 5 days. Now, what will happen? There should be two things. Either the stock market hits the resistance line and goes up into a new bull, which is a new uptrend, and the market will be okay with Donald Trump winning the elections, and a lot of people, they will buy thinking that the economy will be better or something like that. Okay, so if the market is going up and makes a very good impression, a lot of people will be making money. Again, if you are with the stock and you are right with the stock, okay. If you are wrong, I understand. As I told you last time, the whole week was so good, and some people, they lose money. Okay, so it depends on where you are in the stock market. Now, for this video, I will try just to speak about something in general. There are some people who don't want to buy stocks by themselves, because most of the investors, when you say to him stock, he says to you risk, because there is too much risk in buying one stock. So what they should do, they try to buy the whole market or parts of the whole market. We have what we call, if you want the general thing about the whole market, you can see, for example, the Dow Jones Industrial Average. Okay, now there is another one, which is S&P 500, or the Russell 2000, which is 2000 stocks, or 500 S&P 500, which is 500 big and middle cap companies. Okay, these just stocks that are in that index, and they give you the average. Now, if you want just not to worry a lot, let's say you have $5,000, or you have 10,000, or you have whatever, and you want just to buy the market, the whole market in that index, you should see what we call the ETF that follows, that attracts this index. Okay, I give you just an example. The Dow Jones Industrial Average, the ETF is called DIA. DIA. Now you buy this ETF, and it is as if you are following the Dow Jones. If the Dow Jones is going up, you will be making money, and just you leave it for 1 month, 6 months, 1 year, 2 years, 3 years, depending on this index where it goes, you will be making money easily, if you think the market will continue to go up. Now, how would you short the whole market? What if in the following month or 2 or 10 or next year or the other year, the market has been crushing and you see that the market is going down? What you should do? There are also what we call inverse ETFs that you should buy, and you should, if the market is going down, you will be making money also, without going to stocks and short stocks. Okay, it's as if you buy another ETF, which is like a stock. If the market is going down, this ETF will be going up, and you will be making money. It means the opposite thing. Now, that's why I have made my training, which is training level 18, how to short the whole market. A lot of people of you and subscribers, they send me email to give more clarifications how to trade, what are the risks, what are kinds of these ETFs, a lot of things in this training. That's why I put the training in videos and in ebook. And the ebook is 75% discount, and the videos are 50% discount, just to let people get an idea about this. Because if you don't want a lot of trouble, a lot of buying and selling stocks, that your broker will make a lot of money from you, getting always commissions when you buy and you sell, you buy and you sell. By the end of the year, you will lose a lot of money from this expense, which is commissions. There are some people who are just thinking that if they buy the whole market, like Dow Jones or S&P 500 or the Russell 2000, there are other markets that you can buy also. You can buy also sectors, you can buy, but for me, I'm trying just to make it so simple and not to have too much information. Because let's say if you buy Dow Jones Industrial Average ETF, okay, you are controlling 30 stocks in that index, as if you have bought 30 stocks. Because you, by yourself, if you go to buy these 30 stocks, 100 shares, 100 shares, 100 shares, okay, maybe you don't have money to buy all this stuff. So the ETF makes it easy for you to buy 30 stocks. Now, if you want to buy 2,000 stocks, you can go to Russell 2,000 stocks and you buy the ETF. It is as if you bought the whole 2,000 stocks. And you know, in these stocks, some are going up, so some are having a gap up, some are having a gap down, some are going down, some are going up. It's a lot of fun. It's a lot of fun, but you don't see all this fun. You see only the average, which is the price that you see on the ETF. Okay? So it's just a way to do business, to do trading without the expense of trading a lot. You can do it as a swing trader. It means if you think that the market 1 month or 2 or 3, it will go up and you see it and you have a conviction, you just buy and just wait. If things goes your way, you will be making money. Now, if you think that the market will be going down, you can use my training, how to short the whole market, and I give you 3 ETFs that you should use for the whole market. Any one of them is okay. And if the market goes down, you make money. I will show you when to buy, when to sell, and a lot of stuff about trading. So that's why for me here, why I am always try to give you some information about investing, sometimes about day trading, sometimes about swing trading, is just because I know a lot of people are different. Some people, they don't like to be swing trader or day trader. They don't like to, because they have a lot of business they do in their work, and they don't have time to check every day, to do day trade or swing trade. I know a lot of people who have a lot of money and they don't want to mess up a lot with the stock market, so they buy indexes like this with ETFs and they leave them. After 1 year, if the market is going up, he will be making money because he is with the market. If the market is going down, he will lose money. But this is a part of the game. You will never know when you buy a stock that tomorrow it's going up or down. You will never know. There's always a surprise. But you accept everything. Why? Because it is a part of your game, of the stock market game. This is how the market is. One time, I bought a stock which is called ANAC, ANAC, $78, and after the news tomorrow I sold it for $135. Now, how do I know? I don't know. Just I buy according to my strategy, and I thought it could be a good trade. Okay? This is just something that you should believe in. You believe and you act on your thinking, on your opinion. You have an opinion. No one else will tell you that this stock will go up, will go down in 1 month. And you can do this by yourself. You can have a portfolio, and you say, and you put a note for each stock. You say, okay, after 1 month, this stock will go that way, this way, this way, this way, this way. When you finish, for example, it is 1st of November, you go to the 1st of December and you check again your portfolio. And you see how you are surprised. Okay? You see a stock, it goes down, it goes up. You see a stock that it is going up, you think it's going up, and then you find it losing 10% to 20%. Okay? And you understand at the time that predicting is not a good thing. You should decide in what you select as a stocks. And then if the stock doesn't go with the market, it means if you think that the stock is going up and you buy it for that, but after 1 day or 2 or a few days the stock is against you, just exit. There is no way to wait until you have a big loss. When you have a big loss, as I told you before, instead of losing 1% or 2 or 3 or 5%, after a month you lose 20%, 30% of your money. And then you get the pain and you begin begging the market, hoping the market that will come to your price in order just to get your money. You will not be thinking about to make money in the market. You will be thinking just to get your money back, as if the market has stolen your money. It is you who have given the money to the market, to the other traders. It's your mistake. Why you don't go and give like an insurance? As I told you before, always a stop loss is like an insurance. Okay? If you are wrong, you pay little money. This is a small loss. Now, if you are good with the market, you will be making money. But if you leave your stock to the market, you say, I don't care. I buy this stock, I close my account. 1 month ago, 1 month in the future, I will open and see what will happen. Okay, what if the stock was $50 and now it is $10? What do? You lose all your money. And this is a stupid thing to do, because you are not taking trading as a business. You are taking it as a gambling thing. Let's see. Let's buy today and see what the stock is doing tomorrow. Let's see. Okay? I will sleep, and in the morning I will see what this stock is doing. With these ideas that you have in your mind, understand that you will never be a successful trader, because let's say you have a store. If I tell you this example, those who have businesses, they will understand. If I tell you you have grocery store, for example, you open the doors and there is no one there. There is no cashiers, there is no manager, there is no one there, and just leave it. Now the people will enter, they see that there is nothing. What they do? They begin to steal and they loot your store, especially if if the people are neighborhood is poor, and they know that this store, there is no management, there is no cashier, there is no even if there is like what we call like a camera and something, it doesn't matter, because when the people are looting, they don't care about the camera. They are hungry, they want to take some stuff. So that's why all the stores in the United States of America, or any store in the world, what they do, they put managers, they put cashiers, they put security guys to look if someone is stealing in order to catch him, because he didn't pay. Now, why I'm telling you this story is just because how can you buy a stock and you leave it for the market. The market, they loot your trade if they are against you. Now, who are these people? They are people in the market. They are short sellers, for example. Okay, I'm not saying that short sellers are going to loot your money or to rob your money, but they do short the market in order to make money from you. If you stay, the market will be going down, going down, going down, going down, okay, until you lose a lot of money. That's why understand that you should take control of your trade and your account. It means you are doing a business, you are the CEO of your business, it's your account, so you should take care of your account. If you buy and you hold, you buy and hold, buy and hold, you might have one stock or two that does good. I don't say that when you buy and you hold, the stocks doesn't do good. Yes, you can. But this is not a strategy that you follow in order to make money in the market. You should be more cautious about what's the thing that you are doing. Okay, so this is all for this. And if you have questions about how to short the whole market, please comment here or send me a private message. I will give you more explanation, or you just go to the training. 75% for the ETFs, for the ebooks. You can just buy and check how to do things. Maybe in 1 week or 1 month or 1 year or two, you will never know. There will be a clash in the market. At least if you have a clash in the market, you know what to do. Okay, and you just stay and look and make a trade and leave it and see if you are correct with the market. If you are correct with the market, you will make money from the whole market. Thank you very much and have a nice day.